Okay, we are live. Today is December 24th, Christmas Eve. So, first thing I want to say is stop trading. Stop trading. So, this is something that I myself have done like so many years, for the past few years, and it was such a big mistake. So, I want to tell people who maybe are new to market is that stop trading. At pretty much last Friday is really the last day that you should be still trading. Like if you honestly, right after like December, mid December this year will be like December 13th. That's actually the last day. So stop trading because most likely if you are still trading at this time, you did not have a good year. Okay, most likely is that you're trying to make back your losses. You're trying to make it, make this year less bad than it was, and you try to do everything in last 2 weeks. But all the odds are against you right now. First of all, it's holiday season. Most institutional trader, most retail traders wrapped up already. Okay, long before these days, a lot of them just wrap up on December 1st. They just took off, took the whole month off to have vacations. So what's that gonna do to the market is that liquidity is very, very thin. You have very little people and volume trading in a market. So whatever tools you use, technical analysis, fundamental analysis, whatever you do, the thing is that if there are no players in a market, there's no use. Whatever game you want to play, you need people, right? We somehow forget because all the algorithm and technology nowadays, we thought that the machine is trading. No, the machine is trading on behalf of us. But if you don't pull the trigger, there is no volume. There's no volume, there's no player, there's no game. So that's why if you are still trading at the last month, the last few weeks, it's not gonna work, to be honest. Now, of course, some of you may have a spatial strategy that only works in Christmas. If you're a stock trader, maybe you want to ride the Christmas rally. That I understand. So I cannot say for everybody, but for majority of you, just stop. The best thing is to wrap up. If you did not have a good year, that's okay. I didn't have a good year every year, so just wrap it up. And next year it's a completely new beginning. The last thing you want to do is to make your account go even worse in this last 2 weeks because you thought that you're gonna make your money back, but most likely is you're gonna lose more. Then you're gonna carry. It's not only about the money. It's that you're gonna carry that negative emotions well into 2020, and then your January is going to get affected. Then most likely it's also going to affect your February. Okay, I say it from first-hand experience. Everything I say, I experienced myself. So just trying to help people out there, give you guys a lessons that if you can avoid this kind of painful experience, why not? I'm trying to help you guys here. So best way or best thing to do is just to wrap up, just to enjoy. Whatever it is, whatever result you have this year, you've done enough. You put your work. Hey, you can do more maybe, but let's do it next year. Okay, so that's the first thing I want to do. Am I still trading? No. But am I still in the market? Absolutely. And the reason I'm still in the market just because that's my habit. I'm always in the market. I'm always reading the news. I still like to look at what's going on. So if you want, definitely you can still read the news and be in the market. The thing is that you want to keep this routine. So you don't ever want to feel like after holiday you have to catch up. You're like, oh my God, there's 2 weeks worth of news or charts that I haven't done anything about it. Then you have to go back and read everything, and it's just not a good feeling. So for me personally, I never step away from the market. I always keep a finger on it, keep just reading the news, keep understand the market pulse. But I don't pull the trigger. I don't trade. I don't put my money. I don't bait. I'm just watching out. Now, partially because I like it, right? It's partially my passion. So I do like to always to know what's going on in the market, what's going on in the world. Uh, but I understand sometimes it's hard to read the news and you think there's opportunity where it's not really, there isn't really any opportunity. My suggestion is that just shut off your brokerage account. If you trade through banks, lock away your banking account, lock away your bank card, shut off your brokerage account, or have a designated computer that only for information. So that way you stop yourself from trading, but you can still be in the market and reading all the news. Okay, so that's the first thing I want to get out of my chest. It's like stop trading. And let me show you something, because I just keep saying all the liquidity things. But if you take a look at it yourself, okay, if you take a look at just for today, just look at stock market right now. Look at the change. It's 0.15. Look at the S&P, 0.01%. It's like virtually not moving. Okay, Nasdaq 0.06, 0.02 for NYSE. So if you look global market, nothing is moving right now, right? So why do you want to trade in this kind of thin liquidities? This is really everyone's biggest enemy. You don't want to be in a market where it's not moving, then your money is basically like sitting in a saving account. It's not moving. So just look at equity market. It's really not a good time to trade. Okay, at least for this week until like the end of December. Just wrap it up. Now, in terms of the market news, obviously this week is lots of bank holiday, as you can see. Last week, pretty much all the fireworks have downed in the previous week. You know, after the Brexit, the parliament election in UK, and also prior to that, and that's what I was saying, that the last week of 2019 is pretty much December 13th, Friday, 2 weeks ago, because that's where all the last fireworks. You had FOMC meeting, you have Brexit, you have the UK BOE, you have the ECB press conference, and I think that's where you had the UK parliamentary election as well. I'm not sure if it's this one or maybe the previous one. That's pretty much all the big news. And then last week, we did have some PMI data coming from Europe, but it's not really important at this time, you know. And the European market right now is still the same pictures. It's kind of flat, going to a downward trend for the economics, for the economy. And that's why the ECB is most likely going to continue the easing policy. And that works in the global market as well. Let's see if there's any notable things. Higher CPI from UK. CPI from Canada is in line. Employment, we had a very good job data coming out from Australia. That boosts Aussie for a little bit. And monetary policy coming out from Japan. Pretty much the message is that they are going to continue the easing. And if you have, any of you follow the Japanese economy, you'll know that the easing hasn't been working too well. You know, they're trying to depreciate Japanese yen for the past 3 years, and the economy and inflation is still stagnant. So I don't know if that policy really works. If you go online, there's completely two different economic theories behind these two policy changes. Right now, the global census is people still like to ease the market in order to stimulate the market. And that's why you see the global banks from US, UK, Canada, everybody is trying to make their currency cheap in order to help the export. Okay, in order to make the money cheap, to stimulate the export, to stimulate the business investment, to stimulate the personal investment. Because when the money is cheap, what do people do? People borrow to buy asset, right? Think about it. When the mortgage is cheap, what do? You think about, hey, maybe I should buy a house. When the mortgage becomes expensive, the mortgage rate, you don't think about that, right? So that's just putting the Lehman turn. That's a very simple way to know the interest rate. Yeah, that's pretty much last week. Parliament Brexit vote, that is last week. And this week, as I say, ignore all the data point because it's Christmas week. All the bank holiday globally, all right? And then we are heading into 2020. So that's pretty much what I have for you for these 2 weeks. Just take a break. Now, this is a good time. This is a very good time to take a look at the market globally and yearly in a longer trade. Now, many of you know, like, I tend to trade in a swing trade, in hourly, 5 minute, like short style. And sometimes when you look at the hourly chart, it sounds like a long-term swing trade. Actually, it's not, because whatever you can see is just this month and last month. So at the end of the year or beginning of the year, it's really a good time to zoom out and look at the daily chart, look at the weekly chart, and basically see the trend and have a clear understanding of what might happen. Okay, so personal trade, my last few trade of the year, some of them was a loss, like Japanese British pound versus Japanese yen. So I got in this one right after the pre-exit vote. I got in at inside this triangle here, and this was entry, stop loss, and target. Now the thinking logic behind it is that I thought I knew that the sentiment is gonna die down, but I thought this positive sentiment is going to continue at least until the end of this year. Because think about it, for the past 3 years, it's just such an up in the air situation for Brexit. And finally, this is the first time that the parliament and the government are in the same party, that finally they can do something instead of all this political drama. So I thought, and also this is only the first historical moment that the Conservative Party had such a powerful stance in both the government and the parliament. And that's why a lot of things can be done. Doesn't mean it's going to make other people happy, but at least things can be done. It's better than not able to do anything. So I thought that positive sentiment is going to continue regardless of the fundamental weakness. But that was not the case. Actually, the high point after the election, that was the high point for British pound. Everything started going downward, and we can see the triangle got broken, and I got stopped out in this trade. And that's it. Once you place a trade, you have a clear idea, you accept the risk, and if you do get stop out, then that's it. You accept the risk. So that's the losing trade I have. That the last few trade of this year. The Aussie CAD trade is still in. So nothing much going on here. I think it's gonna be like this until next year. Another one I have is New Zealand Swiss. So I got in this one right here. As you can see, a big drawdown, and now we are back up. And the thinking pattern behind this one is that I thought, because the global market this year, the economy was not too bad. And I'm going to show you the equity market later on. And now we're heading into the Christmas rally. So my thinking pattern is that the positive sentiment is going to continue globally. And people are basically going to have a very good mood well into 2020 for the business aspect. And that's going to help the New Zealand dollar a lot. We also see the trade deal ongoing and progress between China and US. Now we are only at phase 1 and everything is still uncertain. We also see the US signing a new deal between Mexico and Canada. So globally, we see a lot of unison going on, and that will help the global market, and that in turn will help the New Zealand dollar a lot and diminish Swiss franc. And again, that's the currency personality. If you want to know more, I'm be more than happy to explain to you. But basically, that's why I picked this trade. And that's why it's working out right now. We don't know what's going to happen. Again, anytime you place a trade, you always have to know you have a risk. And as long as you can accept that risk, and then everything's fine. Another trade I did is euro dollar short. Now this one I did not get in, but if you do get in, I think it's a really good trade. With short euro by US. Why? It's because I think dollar, regardless of the Federal Reserve, are not looking to raise interest rate or cut interest rate in 2020 or 2021. It is still one of the strongest currency in the world right now, because US economy is the strongest. It is what it is. It's the strongest economy right now. Now, people might say that it's not stable. It's all artificial. True, but so do any other countries. So in comparison, it is a very, very strong economy. The equity in the US, in the stock market, is the strongest one right now. So a lot of people are going to buy US dollar just because they want to buy the US stock. They want to buy a US bond. And that in turns will give US dollar a lot of push. On the other hand, euro, as I mentioned, is not really looking too well. We have a lot of instabilities inside the politics in Europe, within each countries, within Germany. Don't forget next year, I think it's next year or maybe next year, the Angela Merkel is going to step down, right? So we're gonna have a new one. The French president, the political situation is not working too well. The Italian debt situation, the Spanish, the Catalonia situation, also the economic situation. So the major four big ones, and not to mention the UK is going to leave Euro. What's going to happen to the money that they owe the European nations? So a lot of things are up in the air, and the economy is also very flat. The US has threatened to put tariffs for the European market. That also add on a lot of uncertainties. So all in all, very few people will want to invest in the European market, in European equity at this moment. They'd rather go with US. If US is not doing too well, they'd rather go back to the emerging market, back to China, right? There are very few people, if you ask your friend, who think that, oh, I'm going to buy the European market. I'm going to invest in European stocks. Why? It's very, very few. Some of you are specialized in that. That's great. But it's just people are looking at the US, people are looking at China right now. So that's why I short euro dollar. And that's pretty much the end year trade I have still going on right now. I'm just going to carry it. Who knows what's going to happen? It's either profit or loss, but I'm not going to trade or manage anything anymore until the January. All right, so let's take a look at the yearly, because that's something very, very interesting. First, let's take a look at the commodity market. And I want to show you first thing is the US 10-year Treasury yield. Now look at 10-year Treasury yield. It's a great chart to know the whole economy, right? This is really the US Treasury, 10-year Treasury is the benchmark for everything. It's benchmark for the bank, benchmark for the mortgage company, benchmark for the equity market, benchmark for everybody. Now, when you look at the equity, look at the bond. Remember that bond price and yield is in the opposite direction. So then when yield goes down, means the bond price goes up. When the bond price goes up, means the yield goes down. And just to quickly recap, when the bond goes up, U.S. bond is as good as gold. So when people are buying bond, it's equal like people are buying gold. Why are people buying gold? Because they are afraid. They think that the world is not good. Maybe there's a war going to happen. So that's why they're buying gold. So the bond is as good as gold. So let's take a look at 2019. Right here. This is 2019. Okay, beginning of 2019. So we basically enter 2019 with the bond yield price going all the way up from 2016. And what does that mean? When the yield goes up, means that people are selling the Treasury bond. People are selling bond because they think the market is going to be great, right? So we can see that the yield goes down, the bond price goes up. The yield goes up, the bond price goes down. People are looking forward to the market. In 2019, it's a continual downtrend in the yield until September. So the very first 3 quarters that the bond price continue to go up, people are continue to buy the Treasury bond. And why is that? Because the instabilities, that means at the beginning of this year, people start thinking that the equity market or the global market is looking very negative. And you heard a lot of people are selling a lot of their holdings in the U.S. Stocks. And that's what happened. We see the bond yield dropped, means bond price going up. And now what happened after September is we start picking up again in the yield. Means people are start selling bond. Right now, people are start thinking, hey, maybe this is not the year of recession. So that's the whole story. 2019, at the beginning of this year, people thought, oh my God, this is a recession. And it was not. So only until September, at the last quarter, people start thinking, maybe it's not a recession. Maybe the market is still strong. And they start buying. Okay, so that's pretty much the story. And we'll see what happens in 2020. Personally, I think, no, I don't think it's going to be a recession. I think the market is still very strong, and I certainly think the strength is very artificial. It is comes from stimulus, but globally, I don't think any central banks or any government want to bear the guilt of sinking down the market. So basically, the party is still going on, and we all know it's going to end very soon. But nobody wants to be the party pooper to say, "Hey man, it's not looking too well. Let's raise interest rate. Let's not. The economy is maybe too hot." Nobody want to do that nowadays, right? The inflation is still low. They have plenty of excuse to not doing that. So that's pretty much the bond picture that tells me. Again, that's my personal interpretation. Maybe you have different interpretation. That's totally fine. If you look at gold and US dollar, completely same thing. At the beginning of 2019, we see the gold price at 1280. All the way hit the high point in September at 1500. So why are people buying gold? Again, people are panic. They think that, oh my God, it's going to be a recession. Let's buy gold. And then it turned out to not to be true. So what's going to happen in 2020? We might break 1500 and keep going up if we have a very chaotic event happening. On the other hand, we might see gold continue to go down and back to the 1200 if the equity market is good. So we don't know. But personally, I really think according to the central bank policy that I don't see a recession coming in just because the government and the banks are trying so hard to not let that happen. However, the only thing that might shock the market is, don't forget, next year you have a US election. That's going to play a big things for the US, and the US is going to affect globally. Also next year, because it's the last year of this president, like if he's continue, he has to get reelected, right? So that the last year of his term in the first 4 years, he might take any direction globally with other countries. So that means he might toughen up. Trump might toughen up and levy more tariff with Europe. We might see the trade deal goes completely chaos, and then we might see the outright big trade war with China. So we don't know how that's going to affect the economy. But I would say next year, it's just like this year. What's going to affect the economy is the politics. Unfortunately, that's the case. So you do have to watch out next year. What's going to happen to the UK with EU? What's going to happen to the US with China or Russia and Iran? And what's going to happen to Canada with China right now? It's not doing too well. What's going to happen to US and Mexico? So globally, it's all tied together, but politics is going to drive the market next year. And let's take a look at the stock market. So first, this is a European stock market. And let's take a look at the Euro 50. Again, we can see that. Let me try to zoom out for you. So, very interesting is that same thing. 2019, or prior to 2019, 2018 is a continuation of downtrend, right? So you can see this is the beginning of 2020. That's where I am right now. And then let me draw this. Okay, there's an arrow here. So guys, it's I opened out a lot of Google Chrome tabs. That's why sometimes it's running very slow. And see, that's what happened in 2020, basically, 2018, and it's a continued downtrend. And 2019, it's an uptrend. So what happens? You're back at the beginning of 2018, right? So it's very simple, very interesting to see this kind of up and down movement in equity market. So that's pretty much tell you it fits into the picture of the U.S. Treasury yield, right? So people were kind of pessimistic at the beginning of 2018 all the way until 2019, and everything started picking up. Same as the UK stock market, French, and Germany. So pretty much same picture. I I'm just going to quickly go through it so you can see very clearly. I will try to find out the US one. Let's see if I can find out the US equity. By the way, if you are interested to see my trade idea, just go to tradingview.com and /NHOCool. You can find out. I published my idea there, pretty much all my trade ideas. So if you want to learn, if you want to see the idea behind my trade, feel free to go there. It's free for now, so you can see a lot of things. So yeah, guys, it's running very slow right now. I'm trying to pull out US. Okay, US equity indices. That's the one I want to show you. All right. Wow. All right, it's coming out. Okay, it's going very, very slow. I apologize for that. Okay, finally, it's loading. Okay. All right. So, great. Now, let's take the S&P first, right? Because this is a benchmark for basically the US economy. Right? If S&P is doing well, the US is doing well. So let's zoom out, and if right away you can see it's pretty much the same picture as the European market. It is even more because you can see that at 2018 we really end 2018 at a very negative note, right? We see the market really continue to go down. People were not happy about the future in 2018. And as I mentioned, a lot of people are selling their equities. They're like, oh my God, it's going to be a recession. And, if you're always selling at low and buying at high, at the end, you're not going to make money, right? So the only way to trade to a profit is you have to ignore your emotion, basically. And the only way you can able to ignore your emotion is when you have enough knowledge. If you have enough knowledge and you can convince yourself logically to buy at the low point and sell at the high point, which is completely against the human nature, but that's the only way you can make money. And that's why a lot of smart people are not able to make money in the stock market. It's because they're always paralyzed by the emotions. So it's very important, and it's very interesting to see this kind of chart, because what reflects behind the chart is not a number, it's the emotion, it's the people's behavior. So we can see that 2018, if you're now looking back, why do people sell in 2018? I don't even remember, right? It might be the news, it might be recession, it might be the news media. But look at 2019, another new high in the stock market, historically. And that's just amazing, right? We keep hitting a new high in all across the US equities. And personally, I think it's going to continue in 2020, right? I don't really see any reason, again, unless it's a political movement. And that's why you have to basically watch out the market. So, that's pretty much what I have for you for this quick video recap. This year, I did make profit, but it's not a point. The point is I'm just very interested to see this kind of behavior and movement. Yeah, that's pretty much it. I will come back with another maybe video lessons in the next week or so. But meanwhile, please stop trading if you're still in the market. That's my best advice for you. Other than that, keep learning, because that's really the only way you're going to be a good investor or trader is you have to have enough knowledge. Because if you only trade by your instinct, you are going to be paralyzed by your emotions, and then you will be always buying at the low, buying at the high and selling at the low. You're not gonna make money. Okay, all right. I guess that's it for this video. Enjoy the holiday. Merry Christmas. I will see you guys very soon. Thanks for watching. Bye bye.